Sanibonani, Dumelang, good evening, and welcome to episode 170 of the Private Property Podcast. I'm your host, Zama. It's the Monday edition of the Private Property Podcast. I do hope that you've had a great weekend, that you were keeping safe as much as possible during this festive season. I know that so many of us probably want to be out and about, but as we're seeing the COVID numbers increasingly going up, we need to exercise a bit more caution. And I know that also later on this evening, we're going to be having an address from the president, so do watch out for that one. Something else that you should definitely not just watch out for, but certainly get excited about that we're bringing you here on Private Property is our December competition. Now, I've been promising this one for quite a number of days now, and I've been saying that we're cooking something up and we want to make it extra special so we can end off what has surely been probably the most intense year any of us has ever gone through. Now, to celebrate, certainly celebrate and also award you as our community, we're running a competition where you stand a chance of walking away with 100,000 Rand in total. So they're going to be different awards, different prizes across different competition. So in total, we're going to be giving away a whopping 100,000 Rands during this festive season. And one of the ways that you can win, certainly on the Private Property Podcast, is by watching the show. Now, you're probably wondering how, because you already watch the show all the time. Well, all you have to do is make sure that you recruit 4 other team members to come together as a team, because we've brought together a competition called Questions for the Champions. Now, Question for the Champions is an exciting competition that we've been cooking up with the team, and all you have to do is tentatively watch the Private Property Podcast. Make sure that you and your 4 team members are watching. Give yourselves a name. I mean, I know that the current reigning champions are Orlando Pirates, so choose an interesting name that you can use, and make sure that when you're watching, the team clocks in with the hashtag of the team to indicate that they are, of course, watching live. And what we're going to be doing that is at the end of every episode, we're going to be asking questions that are based on the previous day's episode. So we're going to be asking yesterday's questions. So tomorrow I'll be asking questions based on today's episode. And of course, you and your team can answer, and you have about a minute to answer those particular questions. And the team that gets it right first will be walking away with a whopping 1,500 Rands. Now, we're only going to be announcing the winners the day after the actual day. So for tomorrow, we'll be announcing the winners on Wednesday. And this is to make sure that we verify that all the team members were in fact live on the live itself, that they did make themselves known, and they also answered first correctly. Now, in the event where there is a split where, another team also gets it right in the same amount of time, well, don't worry, we've also got that one covered. And we're also cooking up a grand finale for later on in the month that we're quite excited about. So you can see that there are quite a lot of things that we are very excited about. And in that grand finale, we're going to be asking 10 questions where you stand a chance of walking away with 15,000 Rands. And the second runner-up is going to walk away with 10,000 Rands. Now, I know that those are a lot of rules, but one thing that you need to remember, recruit 4 of your friends and family. Make sure that they hop on the live as you're watching the Private Property Podcast across the different devices that you'll be watching from, and listen attentively, because all the questions are going to be coming from the episode. You have to be watching live, you have to be answering, and we'll make sure that we announce the winner the following day. It is that simple. So do make sure that you recruit those friends and family and tune into your Private Property Podcast, which is, of course, the premier podcast when it comes to all things relating to property. Well, and I'm quite excited about this one. We all know how we love giving away money and how excited I specifically get when we give away money here on the Private Property Podcast. Now, something else that we've been, that's going to be coming to your screens this week, and I've been talking about it from last week, is Building Stronger Homes, brought to you by PPC. It's going to be coming up just after this podcast at 8 p.m. And that is a great web series that we're going to be running throughout the course of this week that you can look forward to, where we're looking at the different ways that we can build better, stronger homes. And it is in partnership with PPC. You can watch the interviews that I've had with the various guests at PPC about the different ways that, and certainly the different ways we should be thinking about how we should be building our homes. That's a podcast, certainly a web series that you do not want to miss out, especially this festive season. If you are looking at whether extending the home, whether adding, a room or two, or even doing that home renovation, it is one of those resources that we all need, especially during this time of year. Now, I know that that's a lot, and we certainly have an exciting topic to go through this evening with a guest who needs no introduction. I absolutely love speaking to her every time we have her on. This evening, we're looking at the mistakes to avoid this December that could potentially jeopardize your credit score. We know that it's the festive season, it's the big days, and a lot of us probably want to do the most. But we also need to exercise on the side of caution to make sure that we don't mess up our credit score, because 2021 is just a few days away. And you probably want to make sure that you keep your credit score as clean, certainly as high as possible, if you've got, whether it's home ownership ambitions in the new year, or if you want to move, because the reality is landlords now also look at your credit score. And joining me this evening, it is Michelle Dickens, who is the Managing Director of TPN Credit Bureau. Michelle, good evening, and thank you so much for joining us.
Hi, Zama, always good to be with you. Thank you.
It's always a pleasure having a chat with you, Michelle. I think one of the big things with this topic is we are, of course, in the festive season. People probably make all kinds of mistakes. I think one mistake that I know that a lot of people probably didn't make was get into a lot of debt for Black Friday specials. When we saw the retail numbers for Black Friday, they were certainly nowhere near what 2019 was, which, on the one hand is not that great for retail, but on the other hand, I think is quite great for consumers that we're able to, just exercise some caution, not go for deals that we think are great deals, but actually are probably not. But perhaps, take us through some of the mistakes that we do tend to make during this festive season that could potentially actually mess up our credit score.
So I remember my one tenant, it wasn't 2019, it was 2018. And my tenant said to me, Mish, I'm so sorry, I spent your rent on Black Friday. I'm going to have to come up to a payment arrangement with you. How do I fix this? And I can promise you in 2019, he did not do the same. But I mean, if you look at the Black Friday numbers, transactions were down 33% from the previous year. In terms of Bank Serve Africa's report, value was down 52% from 2019. And when you look at how people spent, the majority, 78% of that was spent on credit card transactions rather than debit card transactions. So absolutely speaking to the fact that people were prepared to spend on their credit card, and the value just wasn't there on your debit card transactions. Interestingly, though, online sales were up, I think something like 18%. And even on Cyber Monday, transactions were up 49% from the previous year. So there's a change in behavior in terms of the online transactions, but overall nowhere near where it was in 2019. In terms of, if you look at payment behavior from a consumer behavior, we are seeing a shift towards credit card transactions rather than payday loans. Again, speaking to the fact that people are doing more online shopping and therefore need access to their credit facilities rather than a payday loan, which they can spend. I mean, your payday loan you can spend on rent, deposits, and other kinds of transactions. So certainly credit card transactions on the increase, and use of credit facilities on an increase, and therefore being paid better. So in the past, payday loans are paid better than credit card transactions, but now in terms of the TransUnion data, you're seeing that credit card facilities are being paid better than your payday loans were in the past. So there is definitely a change of behavior from that perspective.
Mm-hmm. I mean, if I look at some of the things that I also bought sort of during that Black Friday, even Cyber Monday, all online, and one of the big reasons was because, of course, we're in the middle of a pandemic. I certainly don't see myself going into a mall to buy something, and so you tend to find that online does become very convenient to be able to do all those kinds of transactions. I'm very interested to find out the the payment patterns when people are paying back their credit card, if they don't default on their credit cards. We're seeing an increase in, credit card sales, as you were saying. I know one of the things that I did was actually pay down the credit card, made it quite a small balance. And I think my credit card limit is like 2,000. And if I need more, I'll just add more money. And that's essentially purely for any online transactions that I need, because I don't want to jeopardize my check account. Because also when you think of the level of fraud is also just quite shocking. So you almost want to safeguard the accounts where you know that there could be quite a significant amount of money, and rather just use that small credit card facility where you can still do all kinds of different payments and purchases online. So how are people kind of paying back those credit cards? Because it's one thing to go online and sort of do the very responsible thing of being able to buy online, especially right now because we're in the middle of a pandemic. But are we paying the credit card as quickly? I mean, I know a lot of them sometimes have like a 60-day interest free, but are you paying it sort of sooner, or kind of waiting it out, doing a minimum payment and having it roll over and constantly being maxed out?
So, I mean, if you look at your credit scores, there's a couple of different aspects to your credit scores that are taken into consideration. And it's not just looking at your payment profile. So your payment profile is how am I paying my account? And there, what the bureaus are looking at is identifying, do you pay your account in the current month? Do you pay it 1 month in arrears, 2 months in arrears, 3 months in arrears? What is the value that's outstanding on that credit card value in terms of your minimum balance? And that will affect your credit score. So if you miss a month, your score shows a 1, your 1 month in arrears, your payment profile line. If you miss 2 months, your payment profile line will change to 2. So you're 2 months behind on that particular account. Really what you want to be in current is a 0. If you then get yourself to I'm 2 months behind on my accounts, and you start to make the minimum payments, but you're not catching up the arrears, it means that your payment profile line for that account remains at a 2. So it just sits there at a 2 balance. In terms of what happened during COVID, a lot of payment relief and payment holidays were provided. And in terms of those payment reliefs and payment holidays, what that means is everyone's payment profile lines where there was payment relief offered were set to a 2. So you were set as a 2 and you wouldn't get worse than a 2 in terms of how far you are behind, so long as you maintained your minimum balance in terms of that relief that you negotiated with your credit provider. And then coming out of your payment holiday, you want to start bringing that back down. But it's not just about what your payment profile line looks like. In other words, are you in current 1 month or 2 months behind, or up to, I mean, we count all the way up to 9. So you can be up to 9 months behind in terms of your payment profile line on a particular account. And let's talk about credit cards as one of those. Is not just how many months you are behind. We also look at credit utilization. Because I mean, if you are offered 2,000 Rand credit utilization, are you maxing that 2,000 out and then paying it down? Versus have you got a 10,000 Rand utilization or facility, but you only spend 2,000 or 3,000 of it? That is perceived to be better because you're not maxing your card out, and you are spending within 30% of what your facility allows, and then you're paying those minimum repayments back. So it's about looking at the overall utilization of your agreements. Obviously, something like a home loan is different, or your car repayment is different because you don't have a facility on that. Say you have a R1 million home loan, you're paying it back at 10,000 Rand a month. Yes, I'm calculating that at a 10%, and I know we're at 7% at the moment. But say you're paying back 10,000 Rand a month, then that doesn't form part of your utilization. Utilization is based on your credit cards that you have or your facilities that you have access to.
And, Michelle, I actually want us to move a little bit to store accounts and some of the mistakes that we should be avoiding, because the reality is a lot of South Africans do have store accounts and, use them for a whole variety of different reasons. And sometimes, and I mean, there's quite a lot of, jokes on social media right now about how the salary that you're going to be getting this week must essentially last you until January 20th or 25th, depending when you're getting paid. And we all know how they stretch from, the end of this week to January 20th or 25th, depending on when you get paid, is quite a long one. I mean, it feels like it's 3 months all wrapped up in one. And it's probably because you've got Christmas, you've got New Year's Eve and all kinds of things. Usually in January, you also have back to school. And hoping that more than anything, people are going to, try and cut costs as much as possible when it comes to some of the festivities. But the reality is that your other debts are going to be waiting. I know some of the service providers have already sent through SMSs saying that, a debit order that would have typically gone off, say on the 20th or 25th, might come off earlier. So make sure that you have funds in your bank account. What are some of the mistakes that we're making that jeopardizes our credit score when it comes to straw accounts?
So Zama, it's about having a budget and understanding what your budget is and spending to that budget. And absolutely, in the month of December, it is a special month because we have extraordinary expenses for our summer holiday as a starting point. It is festive. We are going out more, even under COVID conditions at the moment. And we are going to spend more in the month of December. Take-home pays are down. If you look at Bank Serve Africa at the moment, October to October, still 10% less people earning income, receiving a salary into their bank accounts. That's not as bad as the 34% year on year that it was down in the month of July, but still 10% down year on year in the month of October. So there are less people earning a salary. It's good to see that the salary amounts are going up. So I think it's up 5% from the month of September to the month of October. So that is really good news as well. Into December, and are people earning the December bonuses that they earned in the past? Are they earning a bonus at all? And is it as much as they were earning in the past? Not to mention the fact that there are still less people employed that there were previously. Into January, as you say, and there's extraordinary expenses like back to school expenses. Zama, we profile school payment profile at the moment, and December is typically the best collection month for the schools, where 69% of parents are in good standing with their payment profile. That is the best month. Right now, as it stands for the month of November, October, September, we're sitting at 46%, 47%. So parents are entering the new year with huge burden of debt in terms of school fees that are outstanding into the January period, and the whole process starts all over again, as parents are going to have to not just pay for school fees, but pay for the back to school expenses, stationery, school uniforms, etc. that the children have. So I guess from a store card perspective, if you are going to be spending on your store cards, it should be things like it's not consumables. Like, we don't want to spend money on food and drink if it bless you, if it can be avoided. But rather spend on, if store cards are required, spend it on things like your stationery, your school uniforms, the things that you're going to need in the new year.
And that's certainly one of the things that I think parents right now are thinking about. I've seen social media, parents even talking about school fees and how they are behind on paying school fees. And some of them are also just feeling a bit shortchanged because of the nature of how schooling has been. I mean, there was an extended period where kids were not going to school because of hard lockdown. Not every school had been able to, jump on the online bandwagon early enough. And even when they did, parents were essentially doing quite a lot of the teaching. So there's almost, a tug of war, so to speak, between, the parents and the schools, because some feel, look, fees this year should actually go down given the nature of how 2020 has slowly unraveled. Now we're going to go for a quick break. When we come back, we're going to be exploring what do we then do in the event where we did mess up our credit score in 2020. How do we go about repairing our credit score as best as we can? Because we know that a bad credit score can close so many doors. We always want to make sure that we have a healthy credit score as much as we possibly can. But mistakes happen, pandemics happen, a global one at that. And there's certainly ways that we can now start thinking about ways to repair our credit score as best as we can. And one of the big questions that's, tends to come up quite a lot, and I know it came up 2 weeks ago when we had ABSA talking about debit orders, is how long, does repair take? But also, what happens if you miss 1 or 2 debit orders? Does your credit score almost immediately go down? What essentially constitutes or makes your credit score slowly go down? Those are some of the things that we'll be exploring just after this break. Welcome back to the Monday edition of the Private Property Podcast. I'm your host, Zama Khumalo. This evening, we're looking at a topic that I know we talk about a lot, of course, credit scores, but we're also looking at the mistakes we should be avoiding during this festive season. We know that a lot of us may perhaps be tempted, to spend outside of our budget, but you want to make sure that you plan as efficiently as you possibly can, because negatively affecting your credit score can have so many consequences that we often don't think about on the spot. We're also quite excited, and this is something that I know I've been talking about a lot, about a new web series that's coming to your screens at 8 p.m. This whole week, except of course on the public holiday. And that's where we're going to be speaking to PPC along how we can build stronger homes. We're going to be exploring various themes throughout the course of the week, and really a great conversation if you are either renovating your home, building a home, or are going to be doing so anytime soon. Some of the things that you need to be thinking about when you're even viewing a particular home. So if you have any property goals and you know that part of your property goals is perhaps buying that new home, you want to make sure that you tune into the special web series that's going to be coming to your screens every day this week at 8 p.m. And that is Building Stronger Homes, brought to you by PPC. Now, to get back to our conversation, I'm speaking to Michelle Dickens, who is the Managing Director of TPN Credit Bureau. Now, Michelle, before the break, I did say one of the big things is, a lot of people would have potentially already gotten themselves in a bit of a bind where their credit score has been negatively affected this year. And part of me says, of the many things that happened this year, that one was probably very expected. And that's probably one of the reasons why we had this conversation so many times this year, because we understood that even as the after effects, certainly, or the effects, because it's not even the after effects really, of the pandemic are slowly kind of unrolling, one of the things that was going to be affected is somebody's credit score. So now we're probably at a place where we're reflecting back on the year that was, and we can see how damaging it was to our finances. And perhaps you've now been able to, get a new job, or certainly get your finances in a slightly more stable position. But you need to be able to repair your credit score. Perhaps take us through, how do we then go about repairing our credit scores as best as possible?
So Zama, the first step is to get a copy of your free credit report. That's step number one. Look, if I was to assess all the active tenants in South Africa, and what TPN does is we collect data on a rental payment profile basis, how tenants are paying their rent on a monthly basis. But also on top of that, we re-credit vet all those active tenants on the database to assess what their overall credit score is, to get a benchmark for all active tenants in South Africa in the formal rental market. And we score our tenants using a credit score, and those tenants coming into a lockdown, 67% of those tenants were A, B, or C, which is a quality score, and E and an F would be a not so quality score. So 67% of all active tenants were scoring a quality score. That deteriorated only in the month of July, and it dropped down to 65% of tenants. So there was a 2% decline. That was because of all those payment holidays that were offered. So there were a lot of payment holidays and COVID relief holidays that were offered. The score deteriorated again only in October, only down to 64. And it has popped back up in the month of November and December, back up to 65. So I think that there were a lot of payment holidays offered to individuals, and people need to remember to take advantage of those and reach out to their credit providers. So my first piece of advice would be get a copy of your credit profile, have a look at it, and determine where you are at in your journey on your personal credit profile. Remember that credit scores are unique to the credit bureau. So each bureau is going to have a slightly different score. In terms of TPN, we partner with TransUnion. So go to mytransunion.co.za for a look at your full credit profile. TPN then supplements that with your school payment profile and your rental payment profile. And individuals are absolutely welcome to come to tpn.co.za and access their free credit profile with us as well. In terms of then credit providers don't just look at your credit bureau information, but they additionally supplement it with the transactional data that they have on you as well. So they look at you in terms of their own internal data on how you transact with them internally. So there you would look at your bank for your transactional banking payments as well. So first step, have a look at your credit profile and then assess, number one, are there debts on your credit profile that you can now repay? So in order to get a judgment listed on you, you have to have gone through the process of, or the credit provider will have to have gone through the process of going to court and getting a judgment issued against you. If you are now in a position where you can repay the value of that judgment, just the capital value of that judgment that was outstanding, once you've settled that, it's got to be removed from your credit profile, because credit bureaus cannot store information on your profile where you have settled the amount outstanding. Similarly with a default is where a credit provider has loaded a default on your credit profile with the bureau that they belong to. So it's not necessary that a default will be listed on all the bureaus. So at My TransUnion, if you see there's a default on your credit profile, the process for that default to have been listed would mean that the credit provider would have had to have given you a letter of demand. They would have had to give you 20 business days notice of their intention to list you on the credit bureau, and your account would have needed to have been 3 consecutive billing cycles in arrears at the time that they would have had listed you. So either you didn't receive your notification of their intention to list, that's a technical reason why the default could be removed against your credit profile, or 2, you could now be in a position to settle that debt, or you've already settled it. Settle it, and again, you've got 7 days where the bureau is going to then remove that information from your credit profile. So any of those paid up debts, go log a dispute with the bureau to have that information removed from your credit profile. In terms of your payment profile information, this is now on record, depending on the bureau, for between 2 and 3 years. So if you didn't pay something in July 2020, the fact that you are 1 month, 2 months, or 3 months behind sits on that month for the next 3 years. It'll take 2 to 3 years, depending on the bureau, to slowly work its way back into a further and further history of your credit profile. So what you want to do, you need to understand it's going to be there. If you can, don't miss. If you have, you need to understand that every month that you catch up and get that back to I'm paid on time and in full status, it improves your credit score, because the weighting is based on the recency. The more recent the judgment, default, or non-payment, the more it weights negatively against your credit profile, and the further back that gets into history, the less weighting it has on negatively affecting your credit profile.
You've actually answered, one of the questions that then we did get around when you do miss that debit order, at which point does your credit score go down? Because I think that's one of the questions that we tend to get quite a lot, because people want to better understand at which point exactly does your credit score go down, but also at which point does your credit score go up, because you're almost, trying to slowly work through it. And perhaps you can shed a bit of light with that one, Michelle. At which point is your credit score going to slowly be going higher and higher, especially as you're slowly sort of paying off your debt, or perhaps when you've started new debt in order to build up your credit score? What kind of sort of time frame should you be looking at in order for you to almost max out or get the highest score you possibly can?
Yeah, so each bureau looks at it differently, and each credit provider will supplement and potentially even have their own score based on the data that they're looking at. And even a credit provider will have a different score based on whether it is a home loan application, a car loan application, or personal loan application. And absolutely, for a home loan, you might find that the weighting is much higher and the score is more affected. But for personal loan, there's a lot more leeway given in terms of what is on your credit profile. For a thin file, so a thin file is where a credit provider or credit bureau is trying to score you, but there's insufficient data in order to score you. You don't have an account. There's no history of how you pay any form of account. And so initially what we need to see there is we need to see at least 6 to 12 months worth of transactions as to how you manage that account over a period of time. Again, depending on the type of account that you're looking to access. In terms of how quickly will it affect your score, if you miss 1 month and you catch it up the next month, absolutely it's going to affect your score. There's no doubt about it. If it's one account to a tally of 10 accounts, maybe it's not going to affect your score as much because you've got 9 other accounts that you are paying and you're paying on time. So it depends on how many accounts you have, to what level you are indebted. So not only are the bureaus looking in terms of your score as to how those accounts are paid, but what is the value outstanding? So what is your total exposure to all of your credit agreements? You have R1 million on a home loan, you have 5,000 Rand on car finance, and you have 10,000 Rand credit cards, 2,000 Rand store cards, you have expenses to your insurance, your telcos. What is your total exposure? And then what is your monthly commitment to those? And what is the total Rand value of arrears of all of those? Again, if you have a home loan that's outstanding for 10,000 Rand 1 month missed, that is different to if you have a store card outstanding of 200 Rand. So what is the total value that's outstanding and how many months in arrears are those as well?
We've got a question here from Ustevindra on our Facebook page asking, where can one get his credit profile? So if you want that credit score, where can they go?
TransUnion. Best place to go, www.mytransunion.co.za. You can do it all online.
It's online, it's free, you're able to get that check per annum free across the different credit bureaus, and you're able to just utilize it. I think if you know that you're maybe not in the market for anything, it also just helps you get a sense of what your credit profile is looking like, what's on it right now. And it also just does help you starting to plan in the event where in the new year you might look at buying, for example, a car or a house. And in the event where there are things that shouldn't be on there, you can already start following up on them now. Now, Michelle, before I let you go, any final tips for our viewers at home around what they should be avoiding this festive season that could potentially jeopardize their credit score?
I guess from our perspective is keep a close tally on your budget. Make sure that you stick within your budget. We are instant gratification people. We like to spend, we like to spoil. And the best way to keep ourselves in check, certainly for me, is to have a budget and to make sure itemize mom value 300 Rand, dad value 350 Rand. No, I lie, 300 Rand. What is my budget per person? And then go out to find gifts that match those budgets. Even on your personally, what I do for my social spending is this is my little, and I do it in cash, I'm not going to lie, Zama, and I have a little cash social spending, whatever envelope, and when I run out, it's run out. That's I'm done.
Yeah, it's actually such a good, there was a point, I think, early in my 20s when I did that, where I draw out the social money and I'd be like, this is the money for the month, or if it was on a weekly basis. And if this runs out on that first weekend, then there's no more social. And it really does help, because more often than not, when you're just swiping and swiping, you don't really think about it. It's there somewhere, you know, there's money in the account, but you just don't want to think about it. You don't want to look at the balance. And even, you know, over the weekend, you'll be in whether it's a restaurant or club, wherever, you're just swiping without being mindful of just how much you've been swiping. So having those cash envelopes helps so much, because you know that, look, this is for week 1 up to week 4. And if you're going to dip into week 2 during week 1, then you have to already start adjusting your social plans for the other weeks. So dealing with cash does help quite a lot. I mean, I found there's also just this mental shift where you also just start realizing that, oh my God, actually paying 400 Rand for a lunch out with friends, and let's say it was a short lunch, is actually so much money, because like that's where you actually start realizing that that's a lot of money on, you know, just a quick 1 hour lunch. Maybe rather not do that, maybe just grab a quick coffee and do lunch at home. So all those little, you know, tricks certainly do help in making sure that you keep your budget, you know, in form as much as possible. Now, Michelle, thank you so much for joining us this evening. I know we're going to be speaking to you quite a lot in the new year. Thank you very much for always making time to speak to us here on the Private Property Podcast this year, and wishing you certainly all the best for the festive season, to your team at TPN as well as your family.
Thank you, Zama. Always nice to catch up with you.
It's a pleasure. And that's Michelle Dickens, who's the Managing Director of TPN Credit Bureau. Well, that's a wrap from us here on the Private Property Podcast. Remember, we're launching that special web series brought to you by PPC, where we're building stronger homes. That's certainly one that you do not want to miss out. That's coming up at 8 p.m. You can see how excited I am. I'm even rolling over my words, because it really was that good. I think if you have a property, you're looking at having a property, you're looking at viewing a property, whether you're looking at renovating your home, regardless of how big or small the renovation project is, you want to make sure that you tune into Building Stronger Homes, brought to you by PPC. It's such a great web series. And I certainly spoke to a whole host of different guests that helped us navigate different topics, from essentially asking, how do we build stronger homes? What are some of the things that we should be thinking about when we're building for safety and for legacy, as opposed to wanting to, you know, cut corners and save rands now, but certainly that's going to catch up with us in the long run. And of course, remember to enter our very exciting competition. Make sure to ask your friends and family at home if they can be part of your team. Come up with creative team names. I already want to know what your team names are. Let us know down here on your social media platforms. You can also reach me on my own social media platform and at @zamantungwa_K, where we're quite excited to be giving away up to 100,000 Rand this whole December. And of course, that's going to be split across different awards and certainly different competition across our social media platforms. Remember, you have to be following us on that social media platform in order to stand a chance to win. We are in a festive mood, in a very giving mood, so make sure that you get your team members ready for what's going to be a really great competition, where we ask questions for the legends. Well, that's it for me, Zamantungwa Khumalo, and the rest of the team. I'll be back on your screen for the Private Property Podcast tomorrow at 7. Remember to watch Building Stronger Homes at 8. And until tomorrow, hoping you're staying home and staying safe.
Hi, I'm Clifton Smithers. I live in Belito, where my partners and I run a business called Union 3. As a family, we chose to move here about 6 years ago. What attracted us to the area was the safe and relaxed lifestyle of the North Coast. We're surrounded by so much natural beauty, and we love that it's so casual. It's just not as intense as a busy city. In fact, that's one of the main reasons there's so many people moving into the area. There's some amazing lifestyle estates out here. We've got Zimbali, Brettonwood Estate, and Zimbiti, to name a few. The Belito Lifestyle Centre caters to everyone's needs. There's also some smaller commercial centres like Tiffany's and Salt Rock. There's some excellent restaurants to choose from, and there's a really wide variety of activities on offer. From mountain biking out on the trails to surfing at any one of the beaches, there really is something for everyone. This quiet little town really comes alive over the weekend. The live concerts and the farmers market at the Lychee Orchard is very popular. With the new international airport just 15 minutes down the road and the unmatched lifestyle that this place offers, it's no wonder that the North Coast is the fastest growing town in South Africa. My family and I absolutely love it here, and this is our neighborhood.